Good evening, everyone, and thank you for joining tonight's mentorship evening session, 6th of May 2020, 8:30 p.m. Wednesday evening, like we always meet. I welcome our new joinees. The first few minutes, 10 to 15 odd minutes, we talk about the index, Nifty, Bank Nifty, and few sectors, and then I will take up doubts and questions and what we can do forward for the next 2 days this week. So let's talk about Nifty. I have the monthly chart of the Nifty in front of you where multiple retracements are drawn and they're holding well. The focus is on this red channel, rising channel, as you can see, which I've got from the RSI. April had been a good 14% bounce back. May had opened with a big gap down and then a lot of volatility. We continue to hold on to those views. Sub 8K is holding well. Then we have levels below that 7,500 mark, so on and so forth. There are levels, but it's the weekly chart which can cause a little bit of resistance coming in from the psychological 10K mark. You can clearly see that if we leave a line like this exactly near the 10,000 level, this is where we have distinct support coming in. These are the lows of Feb 2018. This is the low of September-October 2018. And of course, this 10K is one psychological level for sure. There's no doubt about it. And any rally from here on, which we will be able to see from the daily charts, we'll definitely try and get some resistance from the 10K, where we have a falling gap. As you can see, this dotted gap, it's a falling gap. So overall, from a slightly larger perspective, the upside psychological resistance continues to stay at 10,000. But that's not the issue. The issue over here right now, as I can see for the last 2 days, particularly Tuesday, that was yesterday, and today, is the degree of volatility. The intraday oscillation has been extreme these last 2 days, which is good if we time our trades well, and which is also very difficult because the intraday trends are changing quite fast. Now, taking us down to the 75-minute time frame, this is my short-term channel within which the Nifty is trading, and defined definite closed below this channel, which is close to that 9,200 mark I would use, means that the gap down that we saw on Monday is a serious one, and the market can fall furthermore. On the flip side, we need the index to break up out above 93.50. So short-term traders now can use 93.50 on the upside, 92, 92.20 on the downside, Nifty spot levels, which can act as triggers for the next level of momentum. In terms of our strategies, which we trade under the mentorship program, the 75-minute time frame has now shifted into a nascent downtrend. It's a very new downtrend, which, if I take you now to the 15-minute time frame, will show that it is definitely down, and every bounce back were used to sell into this. And the reason why I say 93.50, 93.40, 50 is because of this cluster. See very clearly, again, we have a erstwhile support acting as clear sign and zone of resistance. So until and unless 93.40, 93.50 is taken out on the upside, the markets will find it difficult, and it can give us intraday dips. But it's the sharp bounce backs which are, really, I would say, worrisome for the bears, and equally sharp sell-off, which is worrisome for the bulls also. So it's not an easy week. I think when we met on Monday, I was saying that brace yourself for some volatility, and so far so good. I think this week also, for the rest of the 2 days, it's going to stay volatile. So book protect profits, risk limited. So do whatever it takes so that you sail through this volatile times, and unless you get till the point you get a proper trending down or up trending zone. So view on Nifty is difficult, cautiously I would say bearish. I can also say cautiously bullish in the short term, because the degree of sell-off and the sheer momentum of the bounce back are fairly equal. The Monday's nail, this one, if you look at the third most chart, which I'm just, this one, the Monday's nail or the Monday's gap down, which has caused this big gap, this big abandoned baby bearish pattern, which we call under the candlestick parlance. The high of that, which is close to 95, 30, 33, is going to be critical. So if the Nifty slips below 9200 this week or later next week, we are heading for further downsides, and in that case sub 9k definitely opens up, no doubt about it. It needs to hold above 93.50. I would say 50-50 view on the Nifty. Wherever we get a good buck here and there, let's not keep any particular bias for the week ahead, for the rest of the week ahead. Bank Nifty, if I take you to the daily chart first, we have this breakout of the channel I was waiting for. The retest of the channel happened once. The second retest of the channel is happening now. The monthly chart is not as strong as the monthly chart of Nifty. We know this because of the participation of Reliance Industries, but nevertheless, it's hovering there. Not a good sign. Weekly is far off from its October lows, which we marked on the Nifty. The similar levels for the Bank Nifty corroborates close to that 24,000. So significantly away from it. This is mainly because of underperformance coming in from stocks like State Bank of India. So Bank Nifty, in fact, if you notice during the market hours when the thrust of selling comes, it's most of the time SBI, ICICI Bank, HDFC Bank and all, and Bank Nifty, which hits the day's low first. So definite selling stays within the banking and financial services, which is not a good sign considering it has more than 33-34% weightage on the market. But short term, it's at supports. Short term, it has given a bounce back. Let me take you to the 75-minute time frame. This is the exaggeration on the upside. We're back to the channel borders. This was the channel I was working with. It's likely to give us a breakout tomorrow. If it does so, then tomorrow can be a recovery day. So both the indices, I would say Nifty and the Bank Nifty, per se has given a good move over the last 1 hour today, back to intraday resistances. A breakout and a sustained breakout can give us a move ahead. If it fails and today's low are broken, especially intraday lows of 19,300, this one on the Bank Nifty, then it can lead to further fall. I would just say that this is 1 week where it's better not to keep any bias on the market. Generally, we always finish this analysis saying that we are cautiously bullish or whatever. But this is that particular week where I would say that I'm completely neutral. On the other hand, I'm extremely going to be shrewd to protect my capital rather than to make money. I think this is not the week to make money. This is the week to gain experience and probably protect your profits. And once you have a good trend in your hand in whichever time frame, I think that's the chance where we can reap the benefit. I'm going to quickly run a check on which are the indices, sectoral indices, which are behaving well. So let me run a 5-day rate of change on the indices and check which are the ones which are participating and not. We have the energy participating. Again, energy is predominantly overshadowed by Reliance Industries, extremely strong. On the 75-minute time frame, if you look on the chart which I have on the middle, we have a rising wedge and a rising market. So generally, these guys act as a selling opportunity. Considering we have a stretched situation, considering we are having smaller candles, I think it's time that Reliance eases off a little bit, and if it does, and if the Nifty manages to stay above, this underperformance from Reliance for 1 or 2 days has to shift to some outperformance. In that case, look for banking stocks or information technology stocks like Infosys and TCS. Metal has also performed well, close to 2.3%. IT, now IT, I've been repetitive in our classes saying that do keep a watch on IT because of the move it had given, and now it's cooling off. Infosys is at short-term support, so is TCS. HCL Tech was holding really well today, in the verge of giving us a breakout on the 75-minute time frame. So these guys can perform. Other sectors, auto is kind of 2%. Maruti was the one which behaved well. The issue is with the FMCG. Now, FMCG, PSU Bank, this is predominantly because of State Bank of India, as you can see over here. I will keep the daily charts open so that you don't get confused. Now, I would like to talk a bit about State Bank of India. This is our daily chart of State Bank of India. And clearly, we have a breakdown. Okay. We had a breakdown yesterday, closed near the lowest point of the day. Today, a bit of bounce back. It's a classic doji, and it's what the Japanese candlestick parlance calls as the bullish harami pattern. Generally, these patterns tend to work well. Now, do keep a close watch tomorrow. If State Bank of India moves above 173.5 on the spot, and tomorrow if it closes above this breakdown level, which is 174.5. So if it closes above 174.5, 175, if you have a tomorrow close and a weekly close, this is a definite trap. Then the stock will definitely bounce back further. If I take you to the weekly chart of State Bank of India, it's essentially at the levels where it was in May 2016. And it will be an interesting contra play. So do keep a close watch on State Bank of India. If it fails to do what I'm anticipating, then further weakness, there's no doubt about it. FMCG is mainly worsened by Hindustan Unilever and ITC, both of them, especially Hindustan Unilever, considering the stock was the first one amongst the large caps to go back to a life high with so much momentum, and giving away significant, close to 70% of it is gone, is quite disappointing, and there's no relief to it the way it is selling off. Definitely not a good sign. Similarly, ITC cannot complain because ITC anyways was underperforming for a long time. So underperformance coming from ITC is not surprising, but underperformance coming in from Hindustan Unilever, this is definitely a bit of a surprise, which brings the FMCG to the biggest loser for the last 5 days, followed by PSU Bank, real estate, Bank Nifty, private banks, and media and small cap. So I think if Reliance has to slow down, the Reliance being the main stock which helped the index bounce back, if this guy slows down for the short term, because I don't see the underperformance of Reliance coming in anytime soon, then I think it is the stocks like SBI and the other banking heavies like HDFC, Kotak, HDFC Bank and HDFC both, especially HDFC, considering it has made a bullish harami pattern today. This guy can give us a breakout tomorrow. This shift has to happen for the next few days, or else if Reliance leaves its strength for a few days and the banks cannot relay it well, if the banks cannot support it well, then I think the Nifty will not be able to hold on to current lows. In fact, coming back to the daily chart of Nifty, it has also created a bullish harami pattern. So it'll be interesting to see if this bullishness continues above 93.50 for the Nifty spot. In that case, we can expect a 9,500 on the upside for sure. All right, so we'll end our weekly index analysis and few sectoral picks here. We are looking for performance coming in from banking stocks and the ease of coming in from Reliance, because Reliance is getting tired for sure. All right, then we will move ahead with tonight's class, and let's see what questions you have, what trades you did. Please feel free to check with me, bounce with me your doubts and queries.